here. Today's Wednesday, January 24th, 2024. Well, it's been an up week for gold and silver. Gold was up 1%, silver's up 2%. And for the year, gold is leading the way from a year ago today. All the details are in the write-up. Today, I'd like to talk about how does gold compare to stocks during a recovery period. And we're going to look at the three latest severe downturns and how long it took the stock market to recover versus what gold did over the same period of time. And we're going to include the effects of inflation, because inflation added anywhere from 6 months to about 7.5 years to how long it took the stock market to get back to breaking even as far as purchasing power goes. And so we're going to be looking at the S&P 500 index as a metric for the stock market as a whole, and we'll compare that to how gold performed. Now, we could go back further than 3. We could look at the last 5 periods, because during those periods of time it took the stock market 20 to 30 years to recover. But we're not going to include those periods because gold at that time was at a fixed rate, so it wasn't able to float against other assets and against inflation. So we're going to look back at December of 1972. That was at a market high point, and that's relevant because the S&P just the other day made another market high point. And also, during times of inflation, higher than average inflation, it becomes even more important. So from December of 72, the market high in the S&P 500, it took until July of 1987 before the stock market recovered on an inflation-adjusted basis, just to break even. So if you got into the market in December of 72, it was July of 87 until you could break even on your purchasing power from what you put in the market. During that same period of time, gold exceeded 612% return on an inflation-adjusted basis. So you not only preserved your purchasing power, you expanded it. The next period of time was from August of 2000, when the S&P had another peak, and it took until February of 2015 before you broke even on a stock market basis. So that's almost 15 years. And during that same period of time, the stock market was breaking even for nearly 15 years. Gold was up an additional 338% over breaking even point. So again, gold expanded purchasing power. The most recent period that we're going to see is October of 07 was an extended downturn before recovering in October of 2013. So that's right at 6 years for the stock market to break even. And over that same period of time, gold not only preserved purchasing power, but expanded it by an additional over 67%. So when the length of time is longer and when inflation rates are higher, it's even more important to be an owner of gold during these periods of time. Thank you for tuning in. We hope you enjoyed the content. We'll see you again soon.